Listening to what Mike said about the Fed being patient, it does sound like you think maybe the word transitory dies today.
I think it will be transitory. It will finally go away because I don't think they can keep saying transitory for months on end. I'm not quite sure what the new formulation will be, maybe short-term or short-term pressures or something like that. But I think transitory will move into the dustbin of history.
Yes. Some have pointed out that the awkward thing about what's happened since Jackson Hole is that wage growth has kind of rocketed here, and that it's unlikely many on the Fed believe that productivity is going to be able to keep pace with that. Do you think that's really the story, what's happened to wages?
I think that's one of the keys, because if you think about what's the key risk, it's not just that we have inflation, for, high prints of inflation for a few months, but that it gets into people's expectations. And so workers ask for much higher wages. Firms feel comfortable in being able to pass that on to final goods prices. This hasn't happened for 20 years, but now it's happening for the last few months. And so the labor market is really the key. And exactly as you said, will productivity growth be enough to offset those higher wages? I mean, so far we've seen some pretty good productivity growth. So an optimistic view would be that'll make up for it. But that's highly uncertain. We don't know whether that is going to persist.
Yeah, I mean, case in point, Deere and workers at a number of Deere facilities yesterday rejecting an offer that would have immediately increased their pay by 10% because I think they feel like they have more leverage than that specific deal. Randy, just to dig into that a little bit more, in terms of the data that the government's able to collect around the labor market right now, is it showing a complete picture, or are there aspects that are lacking as we have this conversation? And I ask that because obviously the wage pressure on the one hand, the low labor force participation rate on the other hand, and the fact that a lot of folks are just not in this economy and we don't necessarily, this market, and we don't necessarily know if or when they're going to come back. I mean, how does that factor into this dual mandate for the Fed right now at this very key moment?
Sure, it's really tough because you also have a very high quit rate. So that suggests that people are willing to give up their jobs, not necessarily finding another one, because they're so confident that they can get a higher wage elsewhere. So you see it, as you said, with Deere. You see it in the high quit rates. So that means that there's a lot of pressure in the labor market. And although we've seen relatively low prints for the number of new jobs created, that's not because the job market is weak. It's exactly the opposite. It's because it's so strong, and firms are unwilling to raise wages quite enough right now, because they know if they raise entry-level wages, they've got to raise wages all the way through the whole spectrum, and that means that costs go up dramatically. And in the service company, you've got 75% of your costs being labor-related. So that's why they're a little bit hesitant to do that, but the workers know that they've got the upper hand right now, and they're going to keep pressing.